Good evening. We are the Wolves of Wall Street. My name is Caleb Roberts. I'm a junior finance major from McDonough, Georgia. And I'll be going over the approach that we had last week. Last week, our approach was more safe. We didn't invest that many stocks. We didn't put that many, purchase that many stocks either. So we didn't see that many returns coming from this week. We did make some changes on some of the previous stocks that we had, including just taking out and switching, relocating some of our resources. And to go into more of that, I'll pass it over to my brother Drew.
Good afternoon. My name is Drew Talley. I'm a senior business finance major with a minor in computer science from Mitchell, Maryland. And I'll be discussing how we decided to take out Coca-Cola. Coca-Cola that was losing profit. It was about $5,000 in the red. So we lost $5,000, and we thought that was a bad idea. So we didn't want that to continue, and we thought that it would continue. So we decided to take out 5,000 shares of Coca-Cola, which equated to $1,150,000. And we put that into one of our stocks that was actually really producing. We put it into Disney. We put 10,000 shares, which equated to $1,135,600. And right now, Disney is one of our top 5 producing stocks. So we're happy that's continuing forward. We took out of Bank of America. Bank of America was also going down. We took out 5,000 shares of that, and we're holding on to that because currently Bank of America is low, but it's rising currently. So we're going to look at that profit and see if it's a good idea to invest in that. And then currently we're also looking at Nike. Nike had a game supporting Zion Williams, who plays for Duke, and they lost. They went down in profit, equating to losing about $1.4 billion. So we're going to take a look at the stock and see how it's effective. It currently hasn't affected us all, but we're going to see this week further see how it continues to affect us. And I'll pass it on to the next group member.
Hi, my name is Jonathan Wade, business finance major from Brooklyn, New York. I'm gonna just talk about the 3 stocks that we lost profit in: IBM, Accenture, and Kush Bottles. We lost $8,850 in IBM, $5,400 in Accenture, and $110. Our approach for that is to give it a week to see what happens with its profit. Being that our name is Wolf on Wall Street, we are a team where making risky stocks is important to us as far as bringing in a positive increase in return. But we also don't want to make too much of a risky investment where we're hurting our portfolio or hurting ourselves when it comes to making money. I can pass it on to.
Hey, good afternoon. My name is Frederick Slaughter II. I'm a junior finance major from Atlanta, Georgia, and I'll be talking about the top 5 gross returns. One was PayPal, the second was BB&T, the third was Sony, the fourth was General Electric Company, and the fifth was Apple. PayPal is currently trading for $96.70, and the market value of 100,000 stocks were equal to $9,670,000. The BBT currently sells for $51.26. The market value of 100,000 stocks is $5,126,000. The Sony market value for 100,000 stocks is $4,846,000. The market value for 100 stocks is GE company is market value of 100,000 stocks is $1,080,020. And the Apple market value of 20,000 stocks is $3,484,600. So we will be looking into possibly buying more of all these stocks because they are continuing to show promise and continuous growth. I'm going to pass it on to my brother, Ian Jackson.
All right, smooth. Good evening, good afternoon. My name is Ian Jackson, senior finance major from Nashville, Tennessee, and I'll be covering our approach for next week's portfolio and what we decide to do with our stock. So all in all, we're getting a feel for this market, and we can come to a consensus that we need to trust ourselves better in terms of our stocks and our decisions. We're making sound decisions with the companies and corporations we choose to throw our money in, and we just need to buy more of that going forward. So over the next few weeks, we plan on buying more of these stocks because only 2 or 3 of our stocks are in the negative at the time. So it's not, our bottom 5 isn't negative. They're just not producing as much as the rest of our stocks. So that is the goal with that. Another approach that we have, being the Wolves on Wall Street, we want to have more of an aggressive approach with our selections as well. So possibly looking at some more scalping options. So getting in and out of trades, possibly becoming a little bit of intraday traders. And along with that, finding and looking for high volatility stocks. So we're going to be looking for stocks that have a lot of fluctuation and that can possibly produce quick returns or big returns quickly. So that will be a big emphasis for us as well. All in all, like I said, we plan on covering or getting into some scalping as well. We covered our top 5, but we also decided that we want to invest more into the stocks that are producing the highest,
the percentage
return. So 3 of the top stocks for us that are producing high in the percentage returns are Aptiv, GE, and Microsoft. So Aptiv is producing a 7.4% return. We haven't invested too much in that, but we did decide to put a little bit more money into that. GE is at 7.94. That is actually our highest percentage return. And our third highest percentage return is Microsoft, so at 4.2%. So all in all, our approach, we plan on just being a little bit more aggressive, trusting ourselves, and seeing some high returns from this method. But
and to piggyback on what my brother's saying, back on to the percent returns, we're seeing high returns in the technology sector. So what that tells us is that the technology sector is something that we will continue to invest in. Technology is continuing to grow every day, and those stocks are very volatile, which is a ripe opportunity for Wolves of Wall Street to get in on the action. Signing out, this is Frederick Slaughter II.
Drew Talley.
Jonathan Wade.
Ian Jackson.
And Caleb Roberts.
And we are the
Wolves of Wall Street.
Thank you.